Today, the housing elephant in the room and what to do about it. Hello again, it's Martin North from Digital Finance Analytics World, and latest post covering finance and property news with a distinctively Australian flavour. Last week there was a report released called Housing, Taming the Elephant in the Economy. And now there's a more detailed piece of research entitled Housing and the Economy, Interrogating Australian Experts Views. And I'm very pleased to have on the show today Professor Duncan MacLennan from the University of Glasgow, who led the economic strand of the research. Professor MacLennan, thank you very much for joining us.
Thank you for asking me, Martin.
Well, it's great to have you on the show. And look, there's so much I want to unpack regarding this very important issue about housing and the economy and all of those critical questions. But let's just start with the basic question here. You know, we all, I think, accept that housing is too expensive, certainly in Australia and probably in other places around the world. It's sucking out a lot of air from the broader economy, hence the elephant. But I guess for me, the critical question is this a supply problem or a demand-led problem, do you think?
I think it's both. We obviously react just now and say it's a supply-side issue. You could equally say supply-side issue is an excess demand issue. And I think that both in the short term and the long term, it's both. I think there are lots of issues around about the taxation of housing relative to other assets, the taxation of rented housing relative to owning, monetary policy that all affect on the demand side. But I also think that clearly issues about land supply and what the construction sector does with the land it owns and how we produce housing is really absolutely critical. And unfortunately, in a way, the two interests tend to be divided by federal and state metropolitan scales. And the fact that the two orders of government don't work awfully well together makes the problems worse. So, yeah, there is a important supply side element to this, but there's also a demand side too.
Now let's just sort of unpack the supply side. So basically the question is, are there enough properties being built and have been built of the right type in the right place, right? And certainly what I see is people having to buy further out from town because they can't afford to buy closer into town, which has all of the consequences of more expensive travel costs, long time in traffic queues and those sorts of things, right? The construction sector, certainly in Australia, always advocating build more, build more, build more. And many of the recent policies from the federal government have been to incentivise people to buy more property, despite the fact many would say, I think I would, that we've got probably too much spare property. It might not be the right type of property in the right place, but there's a lot of spare stuff around. And of course, we've got the question of migration, because migration is turned down to zero pretty much at the moment because of COVID. My suspicion is it will come back once COVID goes away again. So on the supply side, we've got the wrong mix of stuff being built for the wrong reasons. On the demand side, demand is led partly by this concept of making money from property, so the financialisation of property, plus very low rates of interest on mortgages and the banks willing to lend a lot to be able to actually allow people to pay more, which of course bolsters their own balance sheets quite nicely and allows the property market to float higher. So you've got this amazing sort of dynamism, and I think, you know, my observation is you've got to look at both sides of the equation because these are two complex interactions. Unfortunately, a lot of people only look at one piece of the puzzle.
That was the origins of our metaphor about the elephant. Housing's a really big sector. The housing industry, the Property Council have actually said that property and housing can be up to 25% of the economy in boom periods. If you look at the very minimal estimate, it's about 6-7% in construction employment, but it's much bigger than that. And it's the major asset that Australians have. And it's also the major form of debt. So it's a really big sector and it's a complex sector. What we were particularly concerned with was that there are outcomes from the operations of the housing sector that impact back onto the economy. The conventional view in economic policy is, in a sense, you're right, population and immigration help drive housing demand, so does rising income. But what policy doesn't seem to get a grip on is that the outcomes from that, in terms of prices, but also these issues about where people live and kind of homes they live in, they actually feed back onto the operation of the economy, onto productivity, onto distribution of income and wealth, and onto stability. And we think these issues are just not being grasped. In terms of the actual issues, this is a long problem. It's not just happened now or COVID. It's been really the policy settings for the last 25, 30 years have been building towards this difficulty. And we have now a couple of different things layered on top of it. Before COVID started, the problem of excess demand, or you might say undersupply, in the major metropolitan areas was beginning to see people in their late 20s to 40s beginning to leave Sydney and Melbourne at significantly increasing rates, simply because they couldn't stitch together a lifestyle, affordable home ownership, a big enough property to begin to develop a family and so on. And we're moving out to other centres. That was before COVID. And it's also a trend that you can see in Canada, you can see it in the United States, and in some other major metropolitan systems. In other words, we have a very metropolitan focused pattern of economic growth because of agglomeration economies, because of productivity. And the main metropolitan cores being both more globally connected and more innovative. That's a productivity surge. When we bring people in and don't, in a sense, make the right housing supply side responses, or don't, in a sense, manage the system appropriately, then what we get is rising house prices basically begin to gobble up the gains from increased productivity and actually make owning property more profitable than investment in human capital or indeed business capital. That's no way to run a railroad, or at least an economy in the long term. But it's been 25, 30 years in the making. And government has put it, Australian government, like many others, has put at the centre of that increasing home ownership. Home ownership's the dream. But actually, if you look at it in these terms, it's been a failure. The overall home ownership rate has fallen by 5% in the last 25 years, despite the fact the longevity of people like myself and maybe even yourself pushes up the home ownership rate. So even against that demographic, it's been falling. And for 25 to 40-year-olds, it's down by about 40% in the last 20 years. And actually, one report out recently says by 2040, less than half of Australians between the age of 25 and 55 are going to be able to afford home ownership. Now, if that's the policy objective, the policy's failing. And there's also, at the same time, more people in and out of home ownership because they can't sustain it, but they get back in, can't sustain it, but get back in. And also there's a significantly growing proportion of people over the age of 65 who aren't investors in a second property, who are actually paying a mortgage. So if you look at just strictly on housing policy aims, the policy has not been a success. And the policy just now of pumping out more first homeowner grants. All governments in the UK and Canada and Australia, these countries I look at most, they all do it. Ultimately, they don't help the economy, and I disagree with the governor of the Reserve Bank on that. It may make a short-term issue, makes long-term things like productivity and distribution of income worse. But also, it's not ultimately raising the home ownership rate. It may accelerate the rate of growth of home ownership for a year or two, but it's not going to do anything for the long term.
And it's interesting, of course, because the Reserve Bank has said they've got no responsibility for house prices. It's somebody else's responsibility, right? The political cycle tends to want to drive short-term incentives for first-time buyers and all of those things to try and get a bit of policy goals and ticks and what have you. But there's nobody standing back and looking about that longer-term cycle beyond the political cycle, and that seems to me to be probably the most critical, vacuum that we've got. The financialization of property has been going on for at least a generation or two, and in fact, some of the IMF papers have talked about this is probably the biggest challenge that actually everyone is facing around the world when it comes to trying to work out what to do with some of these things, because it becomes an asset which actually then creates its own financial return, which is greater than other activity. So, I mean, this is a huge structural question. I guess my question is, where does accountability lie, or where should accountability lie for this, political policy cycle, which is way above the political cycle?
Well, in the recent discussions about this, I noticed that Wayne Barnes, the head of APRA, said that delivering affordable housing is not his job. Philip Lowe at RBA has said controlling house prices is not his job. And actually, of course, they're right. But if you take a narrowly focused view of your job, and may actually even have quite a narrow-minded view on how the economy actually operates. I mean, my criticism of these two positions would be they're part of the problem, and they should be part of the solution. Reserve banks around the world and central banks have actually taken a much wider definition of their tasks and roles. Like, for instance, the Reserve Bank in Australia is now very focused on an unemployment target rather than simply inflation. The notion that you don't look at asset prices, I think, reflects a particular form of theology. But certainly, if you think the asset balance is creating an economy that's basically about a rentier economy rather than a productive economy, you can't wash your hands of it if you're either the head of APRA or indeed the Reserve Bank. What you have to be working with is other parts of the federal system and indeed the metropolitan system to actually beginning to address the policy problem. And this is the real issue in Australia. I found it really revealing that last week OECD launched a fantastic report, the best ever report they've done on housing, brick by brick. It was the presentation on what the problems were was given by the new Secretary General of OECD, who was recently the finance minister in the Australian Parliament. I can't ever have imagined him making the same speech in the Australian Parliament, but that was precisely what needed to be done. And it's why we've taken a lot of stick for saying there really ought to be a royal commission in this. I'm not a royalist in any shape or form, I should add, but that the notion of having a long-term strategic cross-party discussion about the reality of these things. It's because each party follows the fiction that this is good for home ownership and it's good for the economy, and it isn't good for either. So that unless people agree it's not good for either, and how you have to stop doing this and actually think about more constructive solutions, then basically what's happening here is that present generations in Australia, the over 40s, the over 50s, are basically becoming wealthier at the cost of their own children or their neighbours' children. That's basically what happens. Australia is not becoming richer. Some Australians are becoming richer and future Australians are becoming poorer. What's that going to look like in 30 years? And that's why I think a Royal Commission really has to look at this, because it's not good for the economy. And given the global and economic context that Australia is heading to, I mean, after 28 years of prosperity, pretty much driven by the growth around the Pacific Rim and China, if that's a much less certain prospect, I'd be much more careful about how I ran my economy.
Yeah, very interesting. And, the issue here is also debt, right? Insofar that we know that the household debt levels in Australia are very high, mostly mortgage related, right? And still growing, despite the fact that some older households are able to pay down debt. The newer people, the young first-time buyers, are having to take on bigger debts. So the average first-time buyer loan is now 15% bigger than it was a year ago. The winners there are actually the financial system, the banks. And one of my observations is how closely aligned the political powers are in Australia to the financial powers in Australia. And to me, that's one of the real big reasons why we've got what we've got. In other words, the financial system becomes something you have to preserve, right? So if you look at all the initiatives that were taken over the last 18 months or so post-COVID, most of it actually was about bank preservation in various ways, directly or indirectly. And the size of the banking system is getting bigger and bigger, and the banks are getting more profitable, but at the expense of everything else. So, how did that come? Did that come through in your research in terms of the centre of gravity around finance?
What we do know is that if you look at Australia relative to the other advanced economies that are similar and have similar housing systems, that is certainly very high in terms of the ratio of household debt to GDP. And of course, public sector debt to GDP is also increasing quite significantly. But in terms of the growth of household debt, and actually the RBA, and Philip Lowe pointed out this himself 2 or 3 years ago, the fastest rate of growth of debt has been in really the top third of the income distribution. It's not the middle. And I actually think that's a really important observation when we have quantitative easing, low rates, and asset tests, where basically our generation who have equity can get loans, or if we have enough equity to kids, our kids get them. When I was teaching university now, I tell my students that if they have siblings, they should kill them, because there might not be enough to go around for a deposit. But I do think that the present boom, and again, I think in the 3 countries I look at, it's not been driven from the middle or below. I mean, we're managing to do this without any immigration and with population actually falling. Now, I think that what we're seeing is better off households are trading onwards and upwards. They can get readily available cash at very low real interest rates. And that's what's driving the market. So that in some sense, the increases in debt, because these are relatively high wealth individuals, might be less risky than they would be if they were further down the income distribution. But what it strikes me is very much driving the market at the present time. But the prices ripple back down and affect first-time home buyers. And although there's been a surge because of all the assistance, once that stops, then and also when the supply of first-time home buyers also runs out, then there'll be a somewhat different story in that part of the market. But I do think the present boom is different from most of the ones we've seen, because it's very much high-end, high-income individuals who are driving the change and making each other wealthier as they see it, but making everyone else further down the income distribution poorer.
Right, and what does that do then to 2 things? If banks are able and willing to lend more to the upper end of the market in particular, they're probably going to be less likely to lend to businesses. In fact, of course, the Basel risk scenarios would suggest that it's cheaper for them from a capital perspective to lend to housing rather than actually to businesses. And then the second is those younger people who aren't yet in the system will be renting. And yet that is going to have a very, complex relationship then between the supply of rented property and investment property, because a lot of those loans are being made still to investors. So again, it's another complex set of issues.
Yeah, the regulations that were introduced did actually obviously successfully curtail the boom in investor lettings. And the present upswing has been much more about homeowners, although investor lettings have come back quite strongly in the last month or two. So the possibility, the basic economics of what you suggested is still in place, that if you have equity and you have borrowing capacity, investing in housing is for most income groups is a very good way of securing, as you would see it, your long-term assets and your pensions. So no doubt about that. On the point about financial stability, Martin, sorry, I didn't answer that very well. If you look at I talked about the growth in debt, household debt, but also noting that in the last 5-6 years or so, it's been particularly in the upper end of the income distribution. But in that context, what you can see is over the last 25, 30 years, the extent to which the banking system, its main game is mortgage lending. In other words, the banking system in Australia is more dependent on relative stability in mortgages and housing markets than in almost any other advanced economy. The prospect of a downturn is one that ought to be looked at. The Bank of International Settlements put out a report yesterday suggesting that economies have to be a bit more cautious about what's happening about house prices. So presumably the RBA will be listening to the Bank of International Settlements, if not to me. And I think that, and they're saying, there's a real caution here because inflationary effects are likely to see interest rates begin to rise. So this is a potentially very difficult scenario that actually needs to be looked at now. I mean, the historic record is that almost every recession leads to a downturn in housing. Every second major recession with a significant housing downturn, the international evidence suggests causes some kind of significant financial problem. And that's in reasonably sophisticated economies. Australia's been really lucky and well managed that it's escaped that. But I don't think the circumstances that it will escape easily are in place anymore, particularly in relation to international trade. So I think that I'm beginning to sound like a very gloomy Scottish economist at this point, but I do think that this is something people need to pay attention to in a way that they haven't in the last 25 years in Australia. So the financial system is very dependent on it. Households are very dependent on it. You talked about distorting people's investment patterns. Yeah, that basically the incentive structure is, and our international evidence review, which we looked at as well as the experts review, suggested pretty clearly that there is a distortion of investment flows away from additional human capital and small business and other capital into housing and housing assets, basically driving up the prices of existing assets. And that doesn't make a lot of sense.
So do you think then that the BIS rules should be changed? I'm just thinking of the capital rules, because basically they were put in place on the principle that lending for housing was lower risk, so therefore they should be able to do more of it relative to capital, right? Relative to lending to business. Because I've had this theory for some time that basic assumption is one of the root causes of all of this. Because if I'm a banker and I've got $100 of capital to spend, I can basically make 4 times as much money by lending it for mortgages than I can lending to business, which seems weird to me when what we want is productive investment, not just investment at all costs.
Well, the other sentiment of governments, and it's not simply the Australian government who articulate we want more home ownership, is they also usually say they want to be an entrepreneurial economy. But the actual structure of tax incentives and indeed, as you said, the capital adequacy rules are such that we encourage a rentier economy rather than an entrepreneurial economy. So I think that that's an important contradiction in policy. And it's something that a long-term review and why we suggested this really needs a serious cross-party review to actually get to grips with this, to answer these big questions. The elephant's pretty complicated as an animal, and the housing market is too.
Well, I always love that cartoon of, the elephant, and you sort of see bits of the elephant, and somebody's got a tail, and somebody's got an ear, and somebody's got a trunk, and they're trying to work out what this elephant is, right? So 3 blind men and an elephant. But isn't that precisely the point, that this is a set of issues that is so big, so complex, that it can't just be dealt with tactical political responses, nor indeed tactical planning responses. It's a whole mega-size problem that needs a mega-size solution.
That's absolutely right. We had quite a lot of fun when we were doing this report, imagining which character would be holding which part of the elephant. And maybe your viewers could draw the most appropriate cartoon to resolve the issues. But and being serious about this, I do think that that there's a long-term need for change. I do think that the federal government really needs to get a grip of this and have perhaps a second minister in the Prime Minister's office, or something in the central agencies or in the Treasury, bringing together a coherent argument about the role of housing in the economy and how we do it better, and how we get APRA and the RBA and everybody else to actually be thinking about how constructively do we do this whilst doing our own jobs adequately, of course. And I do think that conversation, a really grown-up conversation, needs to be done in this regard, and I don't think it's happening. And I was speaking in a conference in Melbourne, I think it was in 2017, and Scott Morrison gave a really good speech. He was Finance Secretary at the time, Treasurer at the time, and he said, we can't keep, and we won't deliver affordable housing by doing the housing business as usual. But that's precisely what we've done ever since, or Australia's done ever since, is keep doing the same things. And he was right, that in fact, we do need to change. And it's not about huge state expenditures or whatever. It's about thinking through how we manage the system and taking responsibility and coordination within federal government, but also between levels of government. I do think the present housing minister's approach, who basically says it's a supply side issue and it's the states that supply have got to resolve the supply side issue. What then happens is people, and the RBA themselves produced some papers on the supply side issue in Sydney that said it's all down to zoning. Well, it's very convenient for financial institutions or financial authorities to blame municipal planners for the crisis in affordable housing. But it's neither accurate nor fair. I mean, some municipal planning departments are terrible, but there's some that are really good and efficient. And what you've got to think about is what are the other constraints in the system? At the present time, there's land available in all the major metropolitan areas that is owned by construction companies who aren't building on it. Why are they not building on it? Because the equity value of that land is going up significantly. And it may be that they're not intending to hugely expand the size of their construction enterprises right now and then contract them. Why not just hold on to that land, develop it steadily, don't go any faster? And that contributes to significant undersupply. So the assumption that the housing market works really efficiently is one that's often made in governments. But actually, if you do any applied economics, housing economics is not economics 101. I mean, lots of people say that on the television, and every time they do it, I have to say, I switch off. Not in your program, but I do think that it's a really complicated, it's a complicated system. And government has to take account of that. And I do think that my view would be that the federal government has to sort out issues about the big tax issues and the monetary policy issues. And I think the state and metropolitan levels have to sort out the supply side. They're much closer to it. And there are issues about, obviously, planning. There's also issues about infrastructure. Sometimes you can have land that's zoned in which there's no infrastructure to actually allow facilitate development to take place. So there's infrastructure, there's land, there's shortages of construction materials. In Canada at the moment, we've gone from a shortage of timber to a shortage of glue because people have been gluing trusses. So there's all sorts of things come through and why the system doesn't operate in a very easy, cohesive way. And certainly we wanted the thrust of our policy recommendations was to say, yeah, there are things you can do right now that would make things better a little bit, but the real things are about how you evolve a better system for the longer term and get past the short term. A whole series, 25 years of the short terms had a pretty awful outcome.
Absolutely. And so there's two sort of questions then, just as we come to the end. The first is, if nothing changes, what happens if you run the current model into the future? Presumably home ownership continues to decline, the debt continues to rise, and we have more and more people stuck further from where they're working, and productivity will continue to decline.
I think that if the present trajectories continue, I think that we will undermine the efficient productivity of the big metropolitan areas unless the housing supply system within these areas is addressed. And at the same time, some of the environmental issues could be done by looking at more effective supply within the metropolitan areas. So I think that's important. I think in terms of housing tenure, we've talked about the financial sector. The intergenerational report came out last week. It's pretty much devoid of any comment about housing resources, but housing assets are absolutely critical. Since 1907, they've been critical in the way that Australians have resources for their old age. If we're saying that by 2040, only half of the 25 to 50-year-olds will have a house, and that the overall home ownership rate will be heading significantly downwards, there's a big problem for Australia in terms of old age care, healthcare and social care for the over 70s, if longevity, of course, remains as is. That's not very optimistic, but it's not a very optimistic. Scenario, and it's one in which, that I think that social mobility in Australia, and that's been really important for countries like Canada and Australia. I've lived and worked in Melbourne. I've lived and worked in Ottawa, and I've lived and worked in Glasgow. And just the opportunities for social mobility in Australia have been so important. This is killing them, and I think that that will also lead to a much more divided society as well as a less productive economy.
Well, I tend to agree. That's one of the reasons why I continue to run the DFA channel, because I think these issues are really important. Last question then, do you think there is any country, in the Western world who's got this right? Or are they all going down the same rabbit hole in terms of household debt, very high house prices, productivity being eroded as a result?
I think there's so much path dependency in the policy instruments. People usually would answer that question by saying you should look at Germany. Much lower house price inflation, more investment in small companies and education. That's partly because of inflation in the 1920s, post-war reconstruction, and a whole set of things that you didn't become a homeowner in Germany until your near late 30s, because you only got 7 years of mortgage tax relief, so you waited till your peak home before you did it. In terms of the countries that are managing it better, I think oddly, the UK has made much more of an effort on the supply side in housing than Australia has. I think successes have been limited for other factors. And Canada is certainly much more proactive in the housing policy front. And the fact that it has a national housing agency means that there's a better informed understanding of the issues and also there is actually a national housing strategy across different orders of government that Australia could actually achieve fairly effectively. I worked as a chief economist in the federal government in Ottawa, and there was fairly active collaboration with the provinces in some of these issues. I also worked as a chief economist in the state of Victoria 20 years ago, and there weren't many signs of active collaboration on very much. And I do think Australia is kind of hamstrung particularly now, by the dysfunctional relationship between federal and state governments, and housing supply is a particular victim of that.
Yeah.
So I'm sorry. There are countries that do some countries do things much better than others. New Zealand has been much more proactive in trying to deal with what is now a more acute boom than Australia. And I think one or two of the things they've done are well worth looking at.
Right, but the takeaway from that is there are fragmented clues to some of the things that might help, but really no Western economy has been able to crack this rather complicated nut.
No, I think that's absolutely right.
And do you think that is because of the fundamental assumptions from Treasury and from finance and from governments in terms of the way the economy works? Well,
I think that that's true in Australia. I think it's less true in the UK and Canada. I mean, part of there is a problem in this in relation to economics, in that there are very few housing economists or people that study the economics of housing in Australia. There are some very good ones, but there's not very many, which is presumably why I get contracted to do some of this work. Within the federal level of government, there are very few housing economists, and there's very effective people come and serve in the Treasury team, and then the next time you do a report, you go along, it's a completely different set of people. And because they come out of generally backgrounds are about general economic theory, and not with any particular urban economics or housing economics specialism, they tend to revert to first principles because that's what people do. And the really critical thing in all of this is to understand the economics of how housing systems actually work and design the strategy to make it much more effective. And one of the things that does strike me about Australia, with half the economy basically produced or run through 3 large metropolitan areas, the difference between macro and micro, there's a kind of meso or metro level. There needs to be a much better understanding. In other words, there's lots of house price forecast. There will be forecasting within government and the RBA, but actually, I haven't seen one decent forecasting model. There may be some, and I apologise if there's any in the private sector that I haven't seen. I haven't seen one decent forecasting model for the housing market for either Melbourne or Sydney, having spent a lot of time looking at the situations in these. So that there's not enough attention to and capability and capacity to actually think about a lot of this housing economics work that you need to do to understand what the market's doing. Of course, the worst thing you can do about an economy is leave economists to run it. And there's other useful perspectives, but they don't add up to as much as they should.
Absolutely. Well, I appreciate your time today, Duncan. A very, very important conversation. Let's hope that people, one, recognise the elephant for what it is, and two, recognise that the answer to the housing is not simple build more houses. Neither is it, a series of short-term incentives to get more first home buyers into the market. There is a much more structural issue here, which actually I think is really, really critical for Australia and Australians to recognise. So thank you very much for bringing it to our attention. I'll put some links and things to the material below, and I do recommend that people look at this report and take it seriously.
We have 3 follow-up papers from our literature review, one on productivity, one on wealth and income distribution, and one on stability that will be coming out in the next 6 or 7 weeks. So I hope they find it reach people, and I hope they find it useful. And I'm a particular supporter of Australia, and I love being there. And the only reason I'm not there is I got married to a Canadian. I offer this advice with the best possible intent. I think Australia is a fantastic country, but making it unaffordable to its young people is not the way to go.
Absolutely. Well, I always believe that, and why I'm passionate about this as well, is because the potential opportunity is there to make things so much better if we really woke up and smelled the roses and recognised the elephant. So I really appreciate the conversation, really enjoyed it, and thank you very much.
Thanks very much, Martin. Bye-bye.
Bye-bye.